Welcome to Short View Trading. This is your morning market hit for Monday, 16th of September. It's around 9 a.m. London time. What matters today and this week for markets? And in particular, if you're a trader of US equity futures with a 1 to 2 week time horizon, what should you be thinking about and focusing on? Which models and indicators will give you the clearest steer on near-term market direction? That is the purpose of this clip. Well, markets rallied across the board on Friday. All of the 28 indices we track closed higher on the session, driven by growing expectations that the Fed is going to deliver a 50 basis point cut this Wednesday. Initially, earlier in the week, the market had dialed back the case for a 50 bip cut, not least because of that stronger than expected inflation number. On Thursday, that changed after the Wall Street Journal article by Nick Timiraos, considered to be a mouthpiece for the Fed. He talked up the probability that the Fed would come good on a 50 bip cut. And if you look in the rates market and in the front end of the bond market, we're now fully priced for 25 bip cut. There's a 50% chance as well that the Fed will do a 50 basis point cut. That's reflected, as you can see, in the move lower in 1 and 2 year Treasury yields. They closed at a new year-to-date lows on Friday. And consistent with that, the yield curve has continued to steepen. This is a chart of 2s, 10s on your screen. You can see it's now convincingly disinverted, and gold prices were strong again. They were up 0.9% on the day and closed at a new record high, while the dollar, of course, was weaker. All of which was positive, of course, for US equities. They were strong. They rallied back towards the top of their recent pennant formations. You can see that, for example, in the NASDAQ 100. It's been trading in an increasingly narrow range with higher lows and lower highs. It's a price pattern usually associated with indecision in markets as they tread water and then eventually break out one way or the other. The key question is, which way will it break? Will the NASDAQ and other equities follow the usual buy the rumor, sell the fact price pattern? That's when they rally in anticipation of positive news, but then sell off when it's announced. Will that happen into this week's Fed meeting? Well, we answer that in our daily publication. In it, we make a 1 to 2 week trading recommendation, long or short, on US equity futures. It's available on the website to subscribers. We also offer a free trial. If you're interested, click on the link below, enter your name and email address, and we'll set you up with a free trial. What gives us an edge as we make these calls on equity markets? Well, it's indicators like this one you see on your screen now. This is our technical scoring system for the S&P 500, designed to pick the key short-term turning points in the index. It generated a buy signal in early September. As you can see, it's currently neutral, but working its way towards its sell threshold. So on this measure, there's a bit more headroom for equity, some extra short-term upside ahead of the Fed meeting, which fits the buy the rumor, sell the fact strategy. So how are we trading this market? What are the signals we're getting from other short-term models? For detail on all of that, have a look at today's publication. What are we watching this week? Well, all eyes, of course, on the Fed policy decision on Wednesday. There's also a housing data theme this week. We have the NAHB Home Builders Index tomorrow. We've also got housing starts and permits. Existing home sales data is also out this week. And we have policy decisions from the Bank of England and the Bank of Japan on Thursday and Friday. That was your morning market hit. Do follow us on YouTube. Search under Short View Trading. Join us on Twitter, LinkedIn, and or Facebook. Thanks for listening.